Good evening, ladies and gentlemen. A very warm welcome to the Q2 and H1 FY26 earnings conference call of Hinduja Global Solutions Limited. From the senior management, we have with us today Mr. Venkatesh Kola, Global Chief Executive Officer, HGS, Mr. Wensley Fernandez, Whole-time Director, HGS and CEO of the NXT Digital Media Business, and Mr. Mahesh Kumar, Global Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Venugopal from Adfactors PR. Thank you, and over to you, sir.
Thank you, Muskan. Good evening, everyone. Welcome to the earnings call of Hinduja Global Solutions Limited for the second quarter and half year ended September 30th, 2025. Before we begin, I would like to highlight that some of these statements made during today's call may be forward-looking in nature. These statements involve risks and uncertainties, including those related to the company's future financial and operational performance. Additionally, in the unlikely event of a call drop during the conference, we will ensure the call is reconnected at the earliest. I now invite Venkatesh sir to deliver the opening remarks. Over to you, sir.
Good evening, everyone. Thank you for joining the call. Appreciate you all taking the time. As a quick update to our financial performance for Q2 and H1 of FY26, our Q2 total income stood at 1,222.9 crores, which is $141 million US dollars, and our operating revenue was around 1,091 crores, which is 125.8 million US dollars. Our total EBITDA was 158 crore rupees, which is 18.2 million US dollars, and EBITDA margins were 12.9% in the second quarter of FY26. In the first half of FY26, the total income stood at 2,410.2 crores, which is 277.9 million US dollars, and our operating revenue was 2,147.3 crores, which is $247.6 million. Total EBITDA was rupees 317.7 crores, which is 36.6 million US dollars, with EBITDA margins of 13.2%. Going to the next page, we have, as you saw it, we have been focused on maintaining and improving our margins, and we are also changing our focus and orchestrate the future. Our new vision and direction is that we're going to focus on what we call as intelligent experiences. Our vision is to be the most trusted partner for clients driving global business transformation to create intelligent experiences. When we say intelligent experiences, they include two parts. We see it as two parts. Every moment that the customer has a connect with the brand, they typically have an interaction, which is what we are calling as intelligent interactions, and then those interactions typically have a commitment to execute or deliver or fulfill something for the consumer, and that is the intelligent operation, which is the fulfillment process that goes on behind the scenes. And we see these two coming together as intelligent experiences because there's an intelligent interaction and an intelligent operation, which is typically augmented with AI and human talent to deliver a more predictable, consistent outcome for the end consumer. That's what we are calling as intelligent experiences. Next. Our key pillars of focus for the road ahead are we are very future-focused, creating forward-looking service offerings that drive better margins for ourselves and create value for our customers. It will be growth-oriented, where we are going to invest in sales and marketing, where we're going to move towards consultative sales and take a slightly different approach in sales using vertical-focused approaches where there's industry knowledge. And we're going to focus also on driving a team culture that is performance-driven in nature and reward agility and adaptability in the industry. We're also going to create diversity in our portfolio where we are going to focus on multi-tower deals driven through consultative sales. And we're going to simplify our organizational structure where we're going to create a leaner organization with reduced bureaucracy and higher rewards for the people that are there managing these organizations as we grow to the future. And we are going to augment AI into every grain of our operations to be more efficient and to be more effective and to be able to scale much more quickly. Next. With these pillars of focus in mind, the key update that we have related to the acceleration that we have experienced so far is that we are focused on sales and change in the revenue mix that we have. In the first half, we have closed 35 new clients that we have contracted with, and we are seeing the pipeline shifting to more digital services and digital operations, which is 62% of our pipeline today has moved towards digital services and digital operations. We have sharpened our sector focus. We are seeing more and more multi-tower deals in the 3 priority verticals we are focused on, which is BFSI, consumer products and retail, as well as healthcare and life sciences. We're able to do this by leading with consultative sales. We have created a new team called a Global Partnerships and Solutions team, focused on cross-functional collaboration and embedding intelligent experience principles into the client engagements. We have taken our vertical expertise that we have, and we are creating solutions that can be deployed across our customers where we can offer them on a consistent basis that can create repeatable revenue for ourselves with higher margins. And we have created around 12 solutions by co-creating with clients across high-growth sectors. We are continuing to pursue partnerships and acquisitions, and we are continuing to explore opportunities that can help us grow the business more quickly and be accretive to our margins. We have also undertaken aggressive reskilling and upskilling programs within the organization to drive our own team members to be knowledgeable in AI and how they can augment AI into their day-to-day work. We have several upskilling programs underway. As an example, we have launched a program called DigiRise, a specialized AI-focused training module where we are training our teams across board. With these acceleration focus that we are driving the business, we expect that over the next 5 years, we expect that the EBITDA percentage or the EBITDA margin will get to in the mid-20s in the next 5 years. We are also with the acceleration of new logos and sales that we're able to drive, we expect that we will have a more sustained growth because typically 80 to 90% of growth comes from existing customers. So as we establish these new customers over the next few years, we will be able to see sustained growth with the revenue that will be generated from these existing customers. Next. Some of the solutions that we have talked about, as an example, one of them is a Cloud FinOps Navigator. We are seeing a lot of customers who are concerned about the spend that they're doing in public cloud infrastructure, especially as they're deploying AI. The demands on the public cloud infrastructures are going up, and their costs are becoming uncontrolled. So some customers are considering what we're calling as cloud repatriation, where they want to move back to physical data centers. We have created a solution called Cloud FinOps Navigator, which is an AI-powered platform that helps them forecast, segment, and monitor cloud spend, and has an interactive AI assistant that can guide them in how to optimize their cloud spend, how to reduce it, and free up DevOps resources for them to reallocate towards other areas of spend that they need to allocate those funds for. And the other one that we have created was we have created something called a Anti-Money Laundering Lens, AM Lens. It is an AI-driven fraud detection tool that agentically analyzes the transactions, reduces false positives while ensuring human oversight. This is a specific BFSI-specific solution. And in fact, one of the customers that we have helped deploy this with has had significant early success where they've been able to reduce false positives by around 60%, and they have been able to increase the throughput of their team by 3x with the number of transactions they've been able to investigate for anti-money laundering. We have created another solution called Interaction Intelligence, which is more of a horizontal play. This was to transform the QA and compliance and coaching for contact center agents with AI-driven analysis of 100% of the customer interactions, boosting compliance, extracting insights, and also helping improve agent performance in real time. We have used this in our parts of our business, and we are now rolling out to the rest of our business. What we have seen is we have been able to reduce the time to proficiency of agents as we bring them on significantly from almost 10, 12 weeks down to 2 to 3 weeks. And that is resulting in an improvement in margins of over 30%. From a healthcare caseworker standpoint, this is a healthcare-specific solution. We are working with some of the public sector healthcare clients, where we have been able to streamline patient intake and documentation processes, assisting staff with intelligent automation and human oversight for accuracy. So all these are AI-driven solutions where we have used our historical data and experience that we have and combined with human talent and augmenting AI and human talent together to deliver this highly valuable, value-generating AI solutions for our customers. Next slide. In the idea of creating consultative sales, we are repositioning ourselves by focusing more on education for our customers and prospects and creating thought leadership events. We had a large event in Chicago recently in September, where we had over 62 and our customers and prospects show up. It was a 2-day event where we had around 50% were existing customers and around 50% were potential prospects. And we are seeing significant success from these educational events that we are running, where we have been able to bring thought leaders in the industry, our own employees and team members, and our customers and prospects to the meeting. Next. While we are doing all this, we are also keeping our employees engaged and creating a culture that is performance-driven, collaborative, and team-oriented. We have been recognized as a great place to work in 4 geos at this point, and it is in U.S., in Canada, in Colombia, and in Philippines. And we continue to drive the engagement with employees to have a very diverse, that is engaged, empowered, and focused on agility and growth for the future. Next. So I'm going to hand it off to my colleague, Vince, to talk about the digital media business.
Thank you. Thanks, Venk, and good afternoon, everyone, and thank you so much for joining in the call today. I'm going to start with slide number 13, which is a management commentary, and I hope everyone can hear me loud and clear. Tanuja, I'm assuming can hear me. Everyone can hear me, right?
Yes, Vince, we can.
Okay, thank you. Thanks, Venk. So if you go look at slide 13, there's no doubt that the media business continues to face challenges in India, whether it is from OTT or whether it is from free dish or free television services. But there's been, against all those headwinds, to be fair, the entire digital media business has seen a very strong performance in Q2. And this is on account of various aspects that we've carried out in the business, some of them being optimization, but others being growth drivers in terms of the broadband vertical. So if you look at the 4 points that have kind of really driven us in this quarter, the first is there's been a very accelerated sales-oriented approach for wired broadband. We've looked to expand in Tier 3 and Tier 4 markets, And I have a slide which will talk about the strategy that we've adopted, so I won't spend too much time on that. Similarly, we've launched our IPTV or Internet Protocol Television solution. I mentioned this in the Q1 call, if you all will recall, when asked about how we're going to build a flanking strategy for DTV customers that are looking for a digital solution. Celeritics, our enterprise business, has continued to add some prestigious logos in Q2. And as I started this call, I mentioned there are cost optimization initiatives. We're very happy to see that those cost optimization initiatives that we initiated at the start of this fiscal to address the challenging environment, they've already helped improve margins. And as they say, the numbers are there for everyone to see. I'm going to go on to slide 14 now. This is the big one for us. We have launched our Internet Protocol Television solution called One IPTV. We launched it recently in September, and we're quite proud of it because what it does, it provides 650 television channels to customers over the Internet. So suddenly here's a single wire to the home digital experience for our customers. So using a single wired broadband connection to the home, we provide television services, 650 television channels. These are live television channels. So it's your same television channels that you would see using a cable TV connection, but they are now being delivered to you over the Internet, and they're streaming effectively. And then there are also value-added services that we've built in it. And I think the biggest advantage for a customer of Next Digital, our DTV product, or One Broadband, is that we're offering combo plans. And those combo plans are highly affordable, where we've integrated our broadband and IPTV service. We're already available in 100 cities. Even as we speak today, we're rolling out in another 12 cities by tonight. And if you go to slide number 15, we actually had a pretty much of a houseful launch. We launched it at an event called Satellite Cable and Television 2025. It's the big trade show that happens every year in Mumbai. And we launched our product there. My senior colleagues, Amit Luthra, whom you know, joined us in May as our Chief Business Development Officer, and even our CTO, Jaideep, was, delivered a session and essentially highlighting how, keeping in mind the AGS principle of innovation, technology, and a customer-first approach, those same principles are driving the next phase of our digital growth journey. So with the launch of IPTV, there's one more product in our portfolio after wired broadband, after cable television, satellite television via hits, OTT. We now have IPTV also as a strong product in that market. Moving on to slide 16, this is our incredible sunrise performer, Celeritics. As you know, just to kind of give everyone a quick heads up, Celeritics was set up as the enterprise business division of our broadband vertical, and the entire objective was to leverage the infrastructure that we've invested in, that we've built, the teams that we've built, the capabilities that we've built, to be able to leverage all of that and monetize all of that for the corporate sector. And just in Q2, Celeritics has been able to add significantly strong new logos in Q2. But I think the biggest exciting part for us is we've delivered over 3,000 high-speed broadband links in the last 6 months. This is clearly setting the stage for aggressive growth, because that is something that is very unique to us as a company, as a division. So Celeritics has a very clear, unique offering that it pitches, that we use as a pitch to our customers, that no one connects India the way Celeritics can. And we kind of hold good on the promise. So some of our customers have asked for connectivity in the upper reaches of Sikkim, Uttarakhand, and even Andaman and Nicobar Islands, where we provided connectivity to customers, to banks especially, that have asked for this service. We've been able to provide them. And even while Celeritics is delivering connectivity all across India, they also extended its profile and its portfolio to cover managed Wi-Fi, cybersecurity, and even disaster recovery solutions. So all of these solutions are focused pretty much to to address the evolving needs of the modern companies. Modern enterprises need connectivity. Modern enterprises need reliability. Modern enterprises need security. And the entire Hinduja Global Solutions portfolio, our global portfolio, covers all of these solutions to be able to provide corporates in India with the highest quality of service and products that compete with the very best in the market. So that's on Celeritics. Moving on to slide 17, I thought I'd summarize for you some of the exciting things that we've done in Q2. As I mentioned to you at the end of the Q1 call last time, we have been focusing on building an organization. We've been focusing on building integrated solutions as well. And this is now beginning to see traction in Q2. And of course, we'll see acceleration in Q3 and Q4. So there are 5 key pillars that we've looked at. The very first pillar is we have worked on developing and expanding our services to 100 new towns across India. As you know, our digital television business, our HITS platform, Head End in the Sky platform, covers about 1,800 cities and towns in over 4,500 PIN codes. And the entire broadband business is leveraging that connectivity, leveraging that connect with the platforms and the partners and customers there to expand to about 100 cities. And again, in the true spirit of the Hinduja Group of partnership for growth, we are engaging with micro entrepreneurs for lead generation. So we're creating this new organization, national organization of entrepreneurs who will work with us to develop these new markets. That's on the retail and organic base. In terms of Celeritics, we are continuously, as I mentioned earlier, and I won't spend too much time on it, we are building a single vendor solution stack. So that is something that our AGS team and the Celeritics team are working together to ensure that there's a very robust portfolio expansion, not just to increase stickiness of enterprise customers, but to be able to give them a single window approach for products. In terms of the strategic alliance partnership segment, which, as you'll know, was the mainstay of the broadband business, our SAP partners have continued to deliver on their promises. Revenues have been growing there with assured margins. And markets where oil doesn't have reach, we are working on developing new strategic alliance partners. In fact, just in October, and in fact we'll announce it formally obviously in the next quarter, we've been able to sign on to significantly large SAP partners, and those partners, the process is on for onboarding them into the ecosystem. The fourth column that you see on slide number 17 is called the BAGO initiative. This is broadband accelerated growth opportunities. What we realized, there is an incredibly large opportunity of over 1,000 or close to 2,000 smaller independent satellite independent service providers or internet service providers. And the idea is a lot of those are facing challenges in terms of growth and looking for strong partnerships and relationships. So we've created this cell called Broadband Accelerated Growth Opportunities at the head office through a central team. And we're evaluating products and we're evaluating deals, potential deals that could help us accelerate in certain markets. And as a result of managing it through a central HO team, we're able to obviously accelerate the growth in those markets. So that is the BAGO initiative that we've launched recently in Q2. And we've already been able to close certain deals. So a lot of the retail and organic growth that's happening will continue to be driven also by the BAGO initiative. On the organizational slide, which is our fifth critical pillar, we have continued to build a scalable, empowered tech and operation system. The idea is that as our broadband business expands across the country from beyond 350 cities, adding another 100 towns, is very important to create a very quick reciprocal or a troubleshooting mechanism to be able to ensure faster resolution. And we've been decentralizing a lot of processes. One is operationally, and second is technologically. As you know, and as Venk, my colleague, pointed out, HGS is a leader clearly in the tech space, and we have that incredible opportunity to leverage the tech capabilities to build solutions that help our business and help our broadband business grow significantly, and therefore eventually ensure that we start to set up industry benchmarking. So we believe that that is happening. It's on the right track. And with that, I'm going to go to slide 18. This is, it's always satisfying and, to see that you're recognized, and as a company, we're recognized for the efforts we put in. And our broadband business won OTT Entertainment Limited, the very prestigious BCS Ratna Awards that happened in August. Our ISP has won the award for Best ISP Delivering in Rural India. We always keep talking about the fact that the Hinduja Group is very, very robust and is very focused on digital inclusion and connecting the unconnected and the underserved. And I think this award of being the best ISP delivering in rural India bears testimony to that. So we're quite delighted with that. And on the television side, the innovative technology provider winner. We've been the winner in that category where we've been able to provide solutions. And you've seen recently the IPTV solutions. We've had OTT with the only hits platform in the country. So all of that put together always gives us the technological advantage. So it's been a good quarter. It's been a good first 6 months of this fiscal, and we plan to continue where we've left off. So thank you everyone for that and the support. With that, I'm going to pass on the baton to my colleague Mahesh Kumar Nitalapati, who is our global CFO. Mahesh, over to you.
Okay, thanks, Vince. Good evening, everyone, and thank you for joining us today. We appreciate your continued trust and support as we share our performance for the quarter and provide insights into our strategic direction. Having said that, let me walk you through the financial highlights for the quarter. I am on slide 20. Revenue for the quarter stood at 1091 crores, which reflects 3.3% growth as compared to previous quarter. And from a year-on-year, it's a marginal growth of 0.4%. In the current quarter, depreciation expenses are at 118.2 crores as compared to 128.3 crores in the previous quarter. And on year-on-year basis, depreciation has dropped from 133.2 crores to 118.2 crores. Profit before taxes for the quarter is at negative 14.1 crore as compared to 26.5 crores negatives in the previous quarter and a negative of 40.7 crore on year-on basis, which definitely reiterates the messaging that both Vince and Venk has been providing about our transformation initiatives and driven by operational efficiencies and disciplined cost management. Taxes for the quarter are at INR 12.9 crores as against 19.9 crores in the previous quarter, and on year basis, which is fairly consistent at around 9.9 crores for a similar period in the last year. PAT, profit after taxes from continuous operations, are for the current quarter is at negative 27 crores as compared to a negative of 46.3 crores in the previous quarter and a negative of 50.5 crore on year-on-year basis. As mentioned earlier about PBT, we can see the impact of initiatives which are showing up in narrowing of the losses, both quarter-on-quarter and year-on-year. Coming down, the total EBITDA is at INR 158 crore, which is marginally down by 1.1% sequentially, but better by 2% on year-on-year basis. Moving on to slide 21, which is balance sheet overview. We are maintaining a strong balance sheet with a total net worth of around INR 8,098.5 crore with a debt of INR 1,254 crore, reflecting a healthy gearing ratios. The net cash and treasury surplus is around 5,321.3 crores. On cash flows and cash, I can reassure that we are maintaining a strong liquidity position, ensuring that adequate working capital to support ongoing initiatives, which has been discussed in detail between both Vince and Bank. And this resilience underpins our ability to invest in the growth while safeguarding the financial stability. Moving on to slide 22, which is revenue composition. The left side of the chart shows revenue by source, wherein the CX operations constitutes around 55% of our total revenue, and the digital and the media services accounts for 45%. The right side of the graph, the chart shows split by vertical. Tech, media and telecom continues to be our largest vertical, accounting for around 52% of the total revenue. CD and retail is at 20%, followed by BFSI at 19%. Health and life sciences and other accounts for around 5%. And the public sector revenue remains stable, primarily from UK and Canada, which are mainly consistent with prior quarters. Moving on to slide 23, which is revenue composition by origination and the delivery locations. From an origination perspective, the chart on the left side shows for the quarter, India geography accounted for around 39% of the revenue, total revenue originations, and the US is 29%, UK 11%, Canada, Australia, and others adding up to 21%. From a delivery standpoint, again, 43% of the total delivery was accounted from India. Between US and Canada, it's around 28%, where Philippines accounts for around 13%, and the UK and others accounts for 16%. Moving on to slide 24. This slide shows the left side, the bar chart shows the client concentrations. The chart shows how well diversified is our customer base to avoid or to minimize any single customer risk. So our top customer accounts only for 7.6% of the total revenue, whereas top 5 customers account for around 21%, and top 10 customers represents 29.8%. And the right side of the chart shows the DSO. DSO for the current quarter stood at 61 days as compared to 65 days for the same period last year on a year-on-year basis. Better collections have assisted in better DSO for the quarter. Moving on to slide number 25, which shows the details of H1 of FY26 as compared to H1 of FY25. Revenue from operations is at INR 2,147.3 crores versus INR 2,179.1 crore, a marginal drop of 1.5% on year-on-year basis. Reported EBITDA, we have an expansion of around 30 basis points from H1 of FY25 to H1 of FY26, from INR 51.2 crores to INR 54.8 crores. Profit before taxes stood at negative INR 40.6 crores for H1 FY26 as compared to negative of INR 84.9 crores for H1 25. Tax from continuing operations stood at negative 73.3 crores as compared to negative of INR 107.5 crores on a yearly basis. And again, as mentioned earlier, losses are definitely narrowing down, showing the impact of the initiatives that have been put up in place during the years. On total EBITDA, we have an expansion of 6.5% from H1 FY25 to H1 of FY26, from INR 298.3 crores to INR 317.7 crores. So this ends the financial sections. So before closing, I just want to reiterate what both Venk and Vince have mentioned earlier, that we continue to advance our digital transformation agenda. We are also looking at strengthening partnerships and exploring selective acquisitions to accelerate growth in high potential segments. And our commitment to innovation remains unwavering as we invest in technology and talent to stay ahead in the rapidly evolving market. Having said that, I want to reiterate our commitment as an organization is in creating long-term shareholder value through sustainable growth and prudent financial management. Thank you once again to all of you for your continued trust and partnership.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Mandira, an individual investor. Please go ahead.
Thank you for the opportunity. So I have a couple of questions. So last year you mentioned Agent X as central to the AI-led transformation to be rolled out across 20 BPM clients with a 12% QQ user growth. Has the adoption sustained as you scaled, and is it tracking your expected trajectory?
Thanks for the question. And the answer is yes. We have been able to get across 20 clients, primarily in the North America region. Now we are moving on to deploy in the UK and the Asia Pac regions as well. That's the project for this year. With Agent X deployed, we have been able to see sustained improvement in gross margins. In fact, it does an uplift of around 30% improvement in gross margin. And what we have done is we have taken that uplift and we have been able to apply it against or invest into additional sales teams and solution development. So we are funding our internal development without impacting the overall margin capability on the EBITDA level.
Got it, sir. And secondly, has the revenue mix evolved as planned, and is the digital share of total revenue aligned with your 5 years transformation roadmap?
Yes, it is. In fact, the pipeline is showing a very healthy digital pipeline. From a revenue mix standpoint, this year we were supposed to get to close to 50% of revenue mix from digital versus BPM revenue. And we are starting to see that. They're pretty close. It's like a plus or minus 1% for this year that we are projecting the trajectory to end. So we are seeing the things roll out as planned. More importantly, a lot of the new customers that we have acquired are related to digital projects. And typically what happens with digital customers where we acquire related to digital projects is they start off with a smaller project as they feel comfortable and build the trust with us as a company, as a delivery partner for them. The scale grows. So we anticipate that to accelerate the growth in the digital revenues to accelerate in the next few years.
Got it, sir. Got it. And lastly, as a part of your 5-year AI transformation, covering all your margin optimization, GTM refresh, vertical solution, and acquisition, how do you envision HGS architecture redesign as a way it sell, build, deliver, and monetize the value?
So we see that as we progress to the future, we will be more and more using an augmented AI model, where we will be using AI to be augmented with human talent to deliver services. So today, if you look at our BPM side of the business, not the media, but the BPM side of the business, we have broadly, we can divide it into 3 segments. One is where we do technology services, and the second where we do majority of the contact center and business process management services. There's a new service segment that is evolving, what we're calling as digital operations, where we're combining the technology capability, the process management knowledge, and the customer service and interaction knowledge together into one single segment. We're calling it the digital operations, where we'll be able to take an end-to-end business process and re-engineer the process to be able to combine both human talent and AI models that are unique to that specific problem statement, and create a end-to-end business process execution capability for that particular business problem. And as we go through this exercise of doing it, we are going to be pricing our pricing models will evolve to be outcome-based, pricing models where we're going to charge per transaction or per outcome with the customers and create a sustained set of revenue base. Our margin profile for these projects will be much higher than the typical labor arbitrage-levered margin models, where here the scalability is much larger and a higher margin capability that comes along with it.
Great. That was really helpful, sir. Thank you for answering the question.
Of course.
Thank you. The next question is from the line of Smita Mehta, an individual investor. Please go ahead.
Hello. Hi, thanks for the opportunity. I have one question on digital and media services. So now it accounts for nearly half of the revenue. And with strong momentum in enterprise broadband and one IPTV, how do you see business conversions shaping your future operating model? For example, using broadband backbone to enhance BPM delivery or leveraging BPM relationship to facilitate media penetration?
Yeah. Thank you so much for your question, and you're absolutely right. Way back when we became a part of HGS, the objective was pretty much how to leverage the digital capabilities and the inherent, what I would term as field capabilities of Next Digital to work together. So one great example is the product called 1X. This solution, which we rolled out about 2 years ago, is a digital solution that was designed together with the HGS and Next Digital teams to be able to provide our enterprise customers with not just connectivity, because connectivity is a very pedestrian aspect, but to be able to provide them online dashboard management capabilities. So this solution has been designed. Assume you're a bank and you have connectivity in, let's take the most remote place, Andaman and Nicobar Islands, and you're using 100 Mbps of connectivity, and suddenly you see you need a new solution. You need to be able to to increase the bandwidth, etc. You can use this 1X solution and manage your link on your own. And that has been a significant fillip in our side where we've been able to look at Celeritics grow. So that has become a very critical component. So the entire Celeritics business is riding on technology integration across both platforms. Are there any more products similar being rolled out? Absolutely. As I mentioned, there is also cybersecurity. AGS has developed some incredible, strong cybersecurity products. So the banks that we are actually dealing with, or the corporates we're dealing with, we're able to provide them with a single window approach, in terms of how it'll work. So I think from a perspective, as you rightly said, what is it that we're doing from a media perspective here in India? Those are the components that we're doing. And, there's SOC services, etc. So I'm going to get Venk, because Venk and I have been working really closely on how to be able to build value for our customer base in India. So Venk, can I get you to just talk about the cybersecurity and the SOC services so that will add value to the entire pitch, please?
Sure, that's great,
Yeah.
Ben. So one of the things that we've done is, the BPM capability is to be able to staff and manage and monitor different types of services. So we've created a centralized SOC that now services over 20,000 endpoints today for some of our customers, and we plan to expand that and offer it as an offering along with the business broadband capability that's being offered through the media division, where we can provide endpoint security and alert business customers with any threats that they're going to face. We foresee that with AI coming up, more and more of these threats will continue to come out. Cybersecurity management and information security management, especially endpoint security, will become even more critical. And our SOC facilities are gearing up for making sure that we can provide these services to our customers.
Thank you so much for such a detailed explanation. It was really helpful. You also spoke about leaner structures and reduced bureaucracy. Can you elaborate on where you see the next wave of operating efficiency and how will those translate into margin accrual?
Sure. So one of the things that we have been looking at is historically we have had business leadership that was there for each country. So what we have done is we have now divided we are in 9 different countries on the BPM side of the story. So what we have done is we have divided that up into 3 regions. One is Americas, which combines our U.S., Canada, Jamaica, Colombia region as one, or countries as one region. We have our UK and Europe and Africa as one region, and then we call it Asia Pac, which is our Asia Pac is Philippines, Australia, and India as one region. And we have been able to we have created leadership that are at the regional level, so therefore reducing the number of leadership positions that are there. In addition to that, what we have done is we have created AI-based tooling that is going to support a lot of our management team. So that we are more efficient, so that as we scale, we have additional capacity to grow without having to add additional G&A to the organization.
Understood. Thank you so much, and all the very best.
Thank you, Smita.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Aditya Jain, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, I was just trying to understand the cash flow, that the EBITDA includes the interest income on the treasury as well. So where are we deploying the cash flow from operations and the interest income? So there was an item repayment of lease liability around 600 crores in the last year. So can you just elaborate exactly as to where the cash flow has been applied? Thank you.
Okay, thanks, Aditya, for the question. So there are 2 aspects. One is the cash from operations that we are generating. So those cash from operations are used for further operational requirements, whatever is coming up, like facility consolidation, certain initiatives that we are taking. So those places, those cash are getting utilized. And second, the interest income that we are generating on the investments that we have. If we don't see any kind of an immediate need for those amounts, we are redeploying those interest income into further investments. So depending upon the operational flexibilities and the interest income that we are generating, we take a call either to pre-close the lease, which is purely upon the interest arbitrage, or to continue the lease and deploy the funds for further generation of income.
Okay. So what is exactly the lease actually? It's not the borrowings, right? It is.
So these are not borrowings. These are the assets that we take on a leased basis. And then there are certain kind of rental premises that gets accounted as per the new Indian accounting standards. So these gets classified as
what are the lease assets actually? Like, what exactly is the lease assets?
One are the rental premises which gets classified as lease rentals. That is one lease asset. The second is that for our media businesses, we take certain assets on lease basis. Like the desktops, set-top boxes and all. So those things are classified under lease assets, and that is get repaid as per the terms of the leases.
Okay. So thank you, sir.
Yeah.
Thank you. The next question is from the line of Ranga Prasad, an individual investor. Please go ahead.
Good evening, everyone. I have a few observations and then a few questions on which I would like some clarifications. You talked about a drop in the losses, PAT losses. I find that to a great extent this is because of forex gains. Correct me if I'm wrong. 2, I find that the top line has been stagnant, and Venk has talked about improving the EBITDA margin from 13% to almost doubling it to mid-20s. Would this be on stagnant top line or also on increasing top line? Because that would make a huge difference. The third is, while I'm enthused about the initiatives taken in the media division, I'm somewhat concerned about the continuing losses. For example, a few quarters back, it showed that they made profit of 10 crores, and suddenly I find that this quarter the losses are at 38 crores. Now, I'm wondering what has led to the sharp increase in losses. Perhaps Vince could expound on that. Thank you.
Good evening, sir. Good hearing you, sir. I'm going to request Mahesh and Rajiv first to address the financial aspects. Mahesh and Rajiv, would you all like to address the financial aspects?
Yes. Yeah. Sorry,
Mahesh, you want to...
Yeah. No, go ahead. After that, I can take it.
Okay. So just to explain you, we have improved on our EBIT on quarter. So our quarter one EBIT was negative 38.81 crore. Now we are 37.62 crore. So there is an improvement of 3%. Similarly, on a half-year basis, if you see, last year, half-year, we had 80 crore negative, and this year we have 76 crore negative. We have improved by 4.5%. So quarter-on-quarter as well as a half-yearly basis, we have improved on. So there are losses, yes, but we have improved upon the losses because, as you know, we have taken several measures. As Vince mentioned while he was presenting, we are focusing lots on the cost control measures and cost optimization measures. We are renegotiating very hard with our input service providers, with all the vendors, with various service providers. So that's the reason you see all across, whether it's quarter-on-quarter, whether quarter two of last year versus this year, our margins have improved. So all the parameters, like we have been improving on quarter-on-quarter as well as on half-year basis. Mahesh, you want to add?
No, that's fine.
My only the comment that I raised was, I thought the EBITDA losses, the PAT losses had come down mainly because of forex gains. Because if you compare the forex gains in the first half of this year to last year, I think they were a lot more this year. Correct me if I'm wrong.
Mahesh? I'll take it up. So you have a very valid point that you brought it up. So forex gain is not the only factor that has contributed for narrowing of the losses. It is definitely a factor. And what we have done by design, there are two ways of handling your forex fluctuations. One is that you go for hedging and then ensure that your bottom line is protected, depending upon the views that you have. And the second is that when you see that currency is depreciating, then you take a different kind of a position. So that was one aspect. The second aspect, as I mentioned, apart from forex losses, there is a lot of operational efficiencies, levers, and the prudent cash management plan is also drawn in, which is part of our 5-year strategy. So these two have played a role in narrowing the losses for our PBT.
Okay. The second one was
the next question.
Sorry, the second one was relating to the stagnant top line. Do you expect this to continue with the margins improving, or do you expect the top line also to increase along with margin increase, EBITDA margin increase?
Yeah. So for FY20, for the current year, we think that there will be a growth in top line, but not significantly. It won't be that significant because we have redid the sales team, reorganized, and we are focusing on improving our efficiencies and getting our team to be more efficient. So one of the objectives is to not grow and scale an inefficient operation, right? Make it an efficient operation first and then scale. By FY27, next year onwards, we expect there will be growth in the top line as well, a significant growth in the top line. In addition to that, the margin improvements that we are doing today by the end of FY26 will start showing the results in FY27. But on top of it, as revenue grows, especially when the revenue mix changes to be more digital revenue, we will have a higher level of margin. So the number of the margin that I was talking about, 20% plus EBITDA margins, is based on both top line growth and improvement in operational efficiencies.
Okay.
And I'll let Vince answer the next question that you had. Go ahead, Vince.
Thank you.
So, sir, you spoke about the initiatives that have been taken, and you're absolutely right. We are working quarter on quarter. It's an incredibly strong headwind, obviously, for the core business of digital television. But what we've done is we've built in flanking strategies, and those are clearly reflecting in the Q-on-Q EBITDA improvement as well as the Q-on-Q top-line improvement. So the top-line improvement is largely, of course, due to the fact that broadband has been growing. And the bottom-line improvement is not just the input costs, as Rajiv was pointing out, where we've been very, very, the appropriate term is we've been literally cutting input costs to the bone to ensure that the business is sustainable and growth-oriented. But also, more importantly, that we're building a strong flanking strategy of products and solutions that can add to the EBITDA bottom line, sir. So that has been the initiatives on that aspect, sir.
Okay. Thank you very much.
Thank you, sir. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Rohit Patil, an individual investor. Please go ahead.
Hello. Thanks for the opportunity. Just have a few questions. How do you see the client pipeline developing, especially for new digital and the consultative offerings in the near term?
Could you repeat the question, please? I'm sorry. I couldn't completely get it.
Sure. How do you see the client pipeline developing, especially for new digital and consultative offerings in the near term?
Okay. So the pipeline in the 30-plus clients that we have actually won business from this year, almost 50% of it is digital-related pipeline. So digital closing. And 62% of the pipeline that we have today, that obviously over the next 1 year will get converted to actual business. The 62% of that pipeline is all digital and consulting services. So we are seeing a significant growth as compared to if I went back a year ago, only around 30% of our pipeline was digital services. So we are seeing a rapid growth in that. But having said that, typically what happens with digital projects is the initial projects, especially because we are focusing on AI-related projects, they will be smaller in size until the customer feels comfortable figuring out exactly what they're going to do, and because it's a consulting style engagement. And then that turns into a follow-on larger footprint, recurring revenue-based.
Okay. Noted. The next question is, with the gross treasury plus cash at 6,575 crores and minimal debt, what near-term capital allocation decision infrastructure rollout are likely in the next 2 quarters actually?
So Rohit, you're looking for the capital allocation in the next quarter or next 2 quarters on?
With the having of a cash of 6,574 crore, a minimal debt on the books.
Mm-hmm.
On that basis, how you look forward on that?
Yeah, as I mentioned, we are looking for certain strategic partnerships, and also we are looking for any kind of a potential acquisition target, which will help us to grow our business and acquire new capabilities. So as and when we get any opportunities, we will definitely invest cash on that. Yeah.
Okay. That's it. That's it from my side. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, as that was the last question for the day, I would now hand the conference over to the management for the closing comments. Over to you, sir.
Venk, why don't you start?
Yeah, sure. So everybody, again, thank you so much for joining the call and participating and being very inquisitive about our business and asking some really intelligent questions. We will continue to build the business to be more digitally focused with higher margins. This year, we're focused on improving our efficiencies and improving our margins. And once we achieve our objectives related to that, we will focus. Next step would be to focus on driving growth itself, so that we can create a very sustained, high profitable growth for the future. So that is our focus. And Vince, if you can add on related to the media business, that'd be great.
Sure. Mahesh, you want to go first, then I can round it off?
Nothing specific, Vince. I think Venk has neatly covered it.
Yeah.
I just want to reiterate our commitment as an organization in creating a long-term shareholder value through sustainable growth and prudent financial management.
Thank you, everyone. We have obviously headwinds that we've been facing, but we continue to face them head on. And I think the resilience of the organization is best summed up, as they say, always, the numbers tell the story, and the top line remaining, robust and consistently growing, as well as the bottom line, going in the right direction reflects the organizational resilience and the fact that the company is focusing on technology and innovation, as Venk rightly put it out. So thank you, everyone. I want to end with, on behalf of the Hinduja family, and even our chairman, Ashok P. Hinduja, and his family, I was asked to please thank all of you for your condolences that poured in on the sad demise of GP Hinduja, sir. He was an incredible icon who played a significant role in all our businesses, and AGS is no exception. We thank you all on behalf of the promoter group and promoter family, as well as the board, for your condolences. And with that, thank you and good day to you, and I'll hand it over to the moderator.
Thank you, sir. On behalf of Hinduja's Global Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.